back to your favorite podcast on the planet, Realty Talk. Third week in a row of the new year. To my left, we have the queen of the closing table, CEO and founder of Innovate Realty, and a lot of other stuff, which is cool.
So much stuff. So much stuff going on.
It has been a very busy Monday.
And we have Paul Fix-It-All Hansen right here to my right. If you don't know, there's some controversy about the nickname. So, listen to some previous episodes because today we're getting to it. This is going to be short and sweet because we've got things are happening. So I think we just have to jump right in. Yeah.
I mean, market seems really interesting. We at Buy House and Innovate, have brought a lot of new inventory back to market at the new year. And we had some inventory at the tail end of last year. Buyer activity was strained, I would say. But buyer activity is really good so far at the beginning of the year. So obviously just a few data points, but new listing that we brought to market this last week had 20 plus buyers through the open house, multiple offer scenario, 50K over ask. Really, really, really strong performance in just a few short days. So we're feeling very optimistic about 2026.
Okay, so question though. So are you feeling optimistic? There was an announcement. The administration put together a couple announcements last week that were housing related. One of them was investor related, right? So there was a proposed ban on institutional investors buying single family homes. So if you could talk to our audience about what that actually means and would that affect you guys? Do you think it would change anything in the market? What does that look like?
Short answer is it will not affect us. So what they're really approaching is, Blackstone buys America Homes for rent, right? And they go out and buy 200,000-300,000 houses to hold as rentals. And I think we've addressed this to a certain degree in other episodes, but single family real estate has never been looked at as a volatile asset class. And so, institutional investors like volatility because there's potential for big gains.
Right.
So until, 2009, when we had that major, housing correction, everyone looked at single family values as an asset class as very vanilla, values are going to values are going to go up by
stable
1% more than inflation or something like that. And it's just going to be that way for a long time. And then 2009 happens, and then COVID happens, and people on the sidelines are going, "Holy smokes, we could put tons of money to work in an asset class that is very stable. It's permanent. It's got a fixed asset, and and it cash flows." And so, that's what we've seen. And then I think what the administration is trying to solve for is this quote unquote issue of affordability. So rates are in the low sixes. And Americans are trying to buy houses, but because of the increase in value, they haven't been able to do so. And then you layer on in certain pockets of the United States, these investors are coming in and buying gobs and gobs of single family homes that are held as rentals. The argument is that it makes it very difficult.
Right.
My opinion on this is it's just kind of stupid because, institutional investors own less than 3% of the total inventory in the United States.
Exactly. It's like 2.5% to 4% of the inventory. So
it's a very small little sliver. There's some pockets where I think it's a very strong argument. There's certain cities in the Sun Belt or in the Research Triangle where there's a lot of concentration, and that might make an issue. But my point in saying it's kind of stupid conversation, not what we're having, but what the Fed is having, or not Fed, but the government is having, is that how would you even do that?
Yeah.
It doesn't seem constitutional. You're going to say, hey, if you have a certain amount of liquidity, you can't own more than X number of rentals,
which feels so strange coming from this administration in particular. Yeah, like you would think that that wouldn't be something that he would really want to get behind just for his own,
Yeah, I could see them limiting. I don't know. We've wrestled on what that even means.
Yeah,
I don't know.
It feels like a political move to me, along with because the other announcement was about the bonds, putting money back in, all of these things that they've talked about. Interest rates haven't changed much.
Nope. Actually, went up
the 10-year, overall, I think it's done nothing.
Yep.
So for me, it feels a little political. I think that was talk about dumb, smart, like that piece of it, I think was really smart because I do feel that, we all know about headlines and what consumers are actually seeing. And I think, the headlines read like this is going to make an impact.
Yeah.
And even, I see a lot of real estate agents chiming in, a lot of lenders chiming in that this is so great. But at the end of the day, I think we're not seeing, much from that. So I think it's important to just call it what it is and say, I think, selfishly, I would love to, and I would love my agents to be pulling in more clients because of it. And so I understand why agents and lenders, are putting information out there to try and get consumers excited.
Yeah.
But ultimately, we haven't seen many changes. So I think,
Yeah, I think the bigger one that makes me more concerned is what's happening in Los Angeles, which is, they're pushing through a bill that would limit a landlord of a multifamily asset to increase rents by more than 1% of inflation. And so, I think it's possibly the kiss of death for the city. If you've got a landlord that has owned a building 15 or 20 units or 100 units for 20 years, and you're now saying that landlord cannot increase rents to keep up with costs, then what landlords will do is stop putting money into buildings. They will stop fixing water leaks, and they will stop putting new carpet in, which will basically decimate, multifamily values.
Right.
And I also think that, it's just going to completely stunt any of those asset classes from trading.
Right.
So, it's the Wild West in a way.
What's the solution? What's the real solution?
Don't do that. I would say, look, if you have to put a limit like rent control, be logical about the limit. Saying 1% over inflation, that's just crazy. How would anybody go in and buy a multifamily asset? Which we talk about this demand problem, not demand problem, but we're in a housing crisis still.
Right.
We don't have
Supply.
enough inventory.
Right.
So now you're going to discourage people from wanting to build new inventory.
Yeah.
Develop units, clean units up. Like turnover in apartments is a good thing to a certain degree. It's not great for the owner short term, but long term rents go up, and there's a nicer place to live, and I think it's bad.
Yeah. Okay, well, do we have any positives? Because so those aren't helping, but interest rates being in the low sixes, I think as we open today, we have seen some action. I think there is a feeling at the beginning of the year that that buyers are feeling like this is a possibility again.
Yep.
And if nothing else, they are seeing these headlines, and even if we're behind the scenes saying like, okay, that's not really changing a whole lot or doing a whole lot, I think it still does change the overall feeling, which gives buyers a little more confidence. And I think it just comes down to, consulting with the experts and with your agent and with your lender to make sure, to see what you qualify for at the end of the day.
I think the silver lining to answer your question, right? What can we focus on that's positive? I think American consumers are finding confidence, and it's been a tough year or two to be confident in the market.
Yeah.
Generally, I think that American consumers are starting to find a level of confidence.
Yeah.
That's what we're starting to see, which is great.
Yeah.
We need to sell more houses.
We'll take it.
Yeah.
Well, with that, we have some really big things coming that we are super excited about, but they have kept us busy. Yeah. I would say, this year feels like the busiest start to a year I've had in a very long time.
It's been a sprint.
So I'm excited to share everything with our listeners. It might be next week, might be the week after, but coming soon. So many exciting announcements. So, it hurts. I don't like to keep secrets. I like to get things out, but we'll talk about it in the near future.
Do you think it's, can I give like a little bit of a teaser?
Yeah, let's do it.
Like does it possibly have to do with like corporate sponsorship with a company called eBoost? Is that where we're headed?
We've already had that. Yeah. Like it's in the cup right now. No,
okay.
I
That's
really
not officially getting rolled out.
That is not getting rolled out,
okay.
but I
we'll
actually feel, I don't think eBoost has any idea how much money they owe me. Like I can say from like 2010, I can account for thousands. Like there are people that I run into that are friends of friends that are drinking eBoost. And I'm like, oh, cool. I drink eBoost too. They're like, oh yeah, I heard about it from this person that I had given it to years ago. So
disclaimer, this is not a paid ad. We are not getting paid by eBoost yet, but
we should be. Jeez.
If you are listening, eBoost, we're happy to have a conversation. We don't have any corporate sponsors of the podcast yet.
Oh yeah.
But we are open.
Yeah. First one.
Yeah, they could be.
Yeah. Okay.
That might be a new announcement in a couple weeks. I don't know.
I mean, we put it out there, so could happen. Anything can happen.
All right. Well, we appreciate everyone that's listening, watching, however you're consuming this podcast. Please hit the subscribe button. It helps us a lot. Share it with family, friends. If you're an agent in Southern California and you're not at the brokerage, please come over to the brokerage. You're going to want to be over here. We have a lot of exciting things happening. So
yes.
Thank you very much. And it's a wrap.
Yeah. We'll see you next time.